So, good evening everyone. I just did a recording po since unstable jud ang network sa mo ang lugar. So, the topic that we will be discussing tonight is intangible asset other than goodwill. The similarities and differences of the three framework, which is the full PFRS, PFRT for SMS, and PFRS for SE. So first, we have the definition of intangible asset. So an intangible asset is an identifiable non-monetary asset without physical substance. The identifiable criterion is met when intangible asset is separable. That is, it can be sold, transferred, licensed, rented, or exchanged, or where it arises from contractual or legal rights. So, intangible assets, mao ni siya ang mga butang that we cannot touch exactly, but it is possible to estimate their value to the enterprise. Intangible asset can be bought independently of the business itself. So one of its example includes the copyrights, patents, licensing agreements, website domain names, and trademarks. So here are the similarities of the three frameworks. First, we have general principles for recognition. Expenditure on intangibles is recognized as an asset when it meets the recognition criteria of an asset. So usually, expenditures for an intangible item is recognized as an expense. Pero, however, if the item meets the definition or criteria of an intangible asset, where it is probable that there will be future economic benefits from the asset ug ang cost of the asset can be reliably measured, then it will be recognized as an intangible asset. So, if it is not satisfying the intangible assets definition and recognition criteria, it will be included in goodwill. In other words, if an item is originally identified as an expense, it cannot later be reported as an intangible asset. Second, recognition as an expense. So the following items shall be recognized as an expense when incurred. First, startup cost. Startup cost was recognized as an expense kay magamit siya sa taas nga panahon. Um, Not just in 1 year. So, it means dili nimo siya ma-designate all of this cost as an expense to your business in the first year only. Next is training cost. So, most of the time, it favors the entity to treat such cost as expense kay it reduces the profits of the business and thus training cost is required to be expense. And next, advertising and promotion. So, advertising promotion was also recognized as expense. Maminus ni siya from revenue on the income statement. We all know naman advertising and promotion is a cost companies incur to market their products or services to consumers. Companies engage advertising and promotion expenses para ma-boost ang sales and revenue. Next, relocation cost. So relocation cost was also an expense. Need ni siya og financial assistance. Mao ni siya ang cost that are incurred to move the asset from one location to the other and then bringing back to operation state as intended by the management. Next, we have expenditures on internally generated brands, logos, mastheads, publishing titles, customer list, and others similar in substance. Um, the cost of generating an intangible asset internally is often difficult to distinguish the cost para ma-maintain o ma-enhance ang entity's operations or goodwill. So, the cost of generating other internally generated intangible asset kay ma-classify into whether they arise in a research development phase and research expenditures is recognized as an expense. So, however, Expenditures on research on sa internal projects must be expensed as incurred as an entity cannot demonstrate that an intangible asset exists that will generate sa probable future economic benefits. Og ang development phase is an expenditures of an internal project kay ma-recognize as an intangible asset if lang kung ang entity kay makademonstrate all of the following criteria for intangible asset. So next, past expenses on intangible items are not recognized as an asset. Expenditures on intangible item na kanang initially expense cannot later be capitalized as part of the cost of the intangible asset. So if it is not initially if it is initially did not meet criteria to capitalize, then dili siya makapitalize at a later date. Third, we have separately acquired intangible assets initial measurement. So the cost of a separately acquired intangible asset comprises the purchase price including import duties and non-refundable purchase taxes after deducting trade discounts and rebates, and any directly attributable cost of preparing the asset for the intended use. So if ang intangible asset kay ma-acquired separately, so the cost of intangible asset can usually be measured reliably. This is particularly when the purchase consideration is the form of cash or other monetary assets. So for the first, um, the purchase price including import duties and non-refundable taxes. So refers that such taxes which are non-refundable will form part of the cost of the asset. However, sales tax is a refundable tax even if it is paid as part of the consideration of asset at the time of purchase. So, examples of directly attributable costs are cost sa employee benefits arising directly from bringing the asset to its working condition, professional fees arising directly from bringing the asset to its working condition, o cost of testing whether the asset is functioning properly. Fourth, intangible assets acquired as part of a business combination initial measurement. So the cost of an intangible asset acquired in a business combination is equal to fair value on acquisition date. Um, and so if the acquisition date or the acquirer should classify or designate acquired assets, this should be done based on terms and conditions existing at the date of the business combination. So I have here an example of basic problem on how to get intangible assets. So the general ledger of Lean Corporation as of December 31, 2022 includes the following accounts. The first, copyrights 30,000, deposits with advertising agency that will be used to promote goodwill 27,000, discount on bonds payable 70,000, excess of cost over fair value of identifiable net assets of acquired subsidiary 440,000, and trademarks 90,000. And the question is, in the preparation of Lynn's balance sheet as of December 31, 2022, what should be reported as total intangible assets? So it would be copyrights of 30,000 plus excess of cost over fair value of identifiable net assets of acquired subsidiary 440,000 plus trademarks of 90,000 is equal to 560,000. Next problem, Aring Corporation incurred the following cost in 2022. Acquisition of R&D equipment with a useful life of 4 years in R&D projects 600,000, Startup cost incurred when opening a new plant, 140,000. Advertising expense to introduce a new product, 700,000. Engineering cost incurred to advance a product to full production stage, 500,000. The question is, what amount should Irene record as research and development expense in 2022? So, the research and development expense would be acquisition of R&D equipment with a useful life of 4 years in R&D projects, which is 600,000, divided by 4 years equals 150,000, plus the engineering cost incurred to advance a product to full production stage, 500,000. So the total would be 650,000. So that's all po. So the next reporter will now discuss the differences of the three framework.